What's up everyone, welcome back to my channel, welcome back to a brand new video. I hope you guys are doing great and I hope you're having an amazing day. Today I'm gonna bring you another Forex related video. I'm gonna talk with you about how to identify major zones of support and resistance. So before we jump straight into the video, make sure you are subscribed to the channel to not miss out on any future uploads. And also feel free to join my free signal group. You will have the link down below. And if you want to learn my strategies or schedule a one-on-one session with me, make sure to DM me privately on Telegram. My link will also be down below. And if you want to check out my IG or website, both links are in the video description as well. Okay, so and also make sure to ask me anything you want down in the comment section. If you have any questions, I will make sure to reply to every single one of you. All right. So for this video example, I'm gonna use AUD/USD as pretty much always, and you can pretty much do this on every single pair. Okay, it's not only for AUD/USD. Time frame is H1, but you can do this on any single time frame. Things are pretty simple to understand. Okay, so you guys wanted to know how to identify major zones of support and resistance. Now, what is support? What is resistance? Well, resistance and support are basically support is the floor and resistance is the rooftop, is the roof. Okay, so price usually moves between support and resistance. Okay, so price comes to the support, bounces up from it, then it goes up into a resistance, then goes back down from the roof, then maybe it finds some support level here, and then from this support level, which is the floor, price then breaks this this roof and goes to the next level, and then this roof becomes a floor, which is a support, and then from here it goes even more to the upside where it eventually finds a resistance, and then from there it comes back down. Okay, so this is pretty much the definition of support and resistance. It is very simple to understand and very simple to spot. Okay, basic support and resistance is very simple to spot. Now I'm gonna show you how to actually spot major zones of support and major zones of resistance. Okay, so basically a major zone of resistance is when price comes to the resistance, bounces off it, and then comes back to it, bounces off it, and then maybe the third time, and then it goes back down. Okay, so the more touches a support or resistance has, the major the bigger the chance you have for it to hold. Okay, I'm not saying it will hold and it will create new lower lows. I'm saying there's a much higher chance for price to see some sort of rejection. Okay, price might as well just come here, bounce a little bit till here, and then break through it. But all I'm saying is that you can have a bigger chance to get a rejection from this zone when you see a resistance being touched multiple times. So let's say you see a resistance being touched 2 times, and then the third time you are pretty sure that it has already been tested 2 times and it hasn't been breached. You then are pretty sure that it will show you a sort of rejection. Okay, and how you can benefit from it, you might ask. Well, it's very simple. Knowing that it might throw you a rejection, it doesn't matter how big the rejection is. Once you see price approaching it, you then come and go to a lower time frame and then look for a entry there with a smaller stop loss, and then you can only aim for a small bounce, but entering it on a lower time frame, that will give you a very good risk to reward ratio. Okay, so this is the key. After you identify major zones of support and resistance, the key is to then drop a time frame or more and find a entry on the smaller time frames to get a big risk to reward ratio. Okay, that's how you should use it, in my opinion. Of course, you should always do your own research, your own backtest, and then determine if this style suits you or not. Okay, so look here on the H1, we can see that we have a major zone of support. Okay, so we have a major floor here. Why? Well, we had a first touch right here. We had a second touch right here. We had a third touch right here. We had a fourth touch right here. And then we have the fifth touch right here. Okay, and let's say you would have wanted to enter here. Okay, after you would have seen all these touches, and then eventually it got even more touches. Okay, so let's say you would have find yourself around here. Okay, this is where you would have got in the market, and you would have seen this major area of support. Well, why is it a major area of support? Well, because it got many touches. It's been tested many times and it hasn't been breached. It has always rejected from it. Okay, so after you know this, you know, okay, why wouldn't I go on a smaller time frame to try to catch a small bounce of it, not a aiming for the fences. Okay, trying to aim for the take profit being here, a 1 to 100. No, something small as aiming for this local high right here. That could be enough. That could be your bounce and that could be your take profit. Okay, so after you determine this, all you have to do then is to go on a smaller time frame. I would either go on the 15-minute, or if I want to be even more advanced, I could go on the 1 minute, on the 5-minute, considering I did my analysis on the H1. If you would have done it on the H4, you could have considered going on the 30-minute or the H1. Okay, but let's say you did it on the H1, I would go on the M15 or even on the M5 to look for a entry. Okay, so what I would look for is either a change of character, that means a small break of structure to the upside, and that's when I would look for entry, or I would look for a very strong bullish engulfing. All right, so now I would just play the market. I would just play the market. My market structure on the M5 would be this one. That's the lower high. This is the lower low. So let's play the market. Okay, we have a small break, but this is not a very strong break, so I'm not taking it into consideration. I wanted to see a full body break, and then I would have entered on a retracement. Okay, so let's see. Even if I wanted to enter a retracement, I mean, I would have had this hammer here, but I wouldn't really be interested in entering. Okay, because this wasn't a break, this was just a wick. Okay, so we play the market, boom. As you can see, it dropped even further. So it was good that we didn't enter. And we didn't enter, why? Because I didn't saw any break of structure and I didn't see any strong bullish patterns, bullish candlestick patterns. Okay, so now if I do see a very strong bullish candlestick pattern, I would consider entering. Okay, my new zone of market structure is this one right here, and this would be my take profit, this one right here, my this local high. Okay, so this is my zone of market structure, my range of market structure on the M5, and boom, this is where I would have entered for the first time. This is a bullish engulfing. I would be a bit aggressive and enter here, stop loss right below, and then the take profit would be right here, which would be a very nice 9.5 R, by the way. Let's see, maybe I managed to get another entry along the way, okay, because I follow market structure and maybe it will give me another entry. Oh, guess what? We would have been stopped out, so we lost 1 hour there. But look what price gave us. It gave us a very good hammer candle, which I would more than likely go in for a buy. Look at how long this wick is. Okay, so this is exactly where I would have entered a buy once more. Stop loss right below the wick, and same take profit. Okay, which would give us a 8.7 R. All right, so we just lost 1 R, but if this trade hits our take profit, we are still 7.7 R in profit, which is very good. Okay, so let's see how the market plays out. We can see that market started to become very bullish. Let's see, boom, it break our structure. So now what I would do is I would wait for a possible entry around this area right here. because that's pretty much the fib retracement area. There's no need for me to place it. It's very clear to see. So I would wait for a possible entry around there, but let's see if price actually retraces, and it doesn't. Okay, maybe I'll extend it a bit more and see if I manage to get a entry if price retraces, but it looks like it's going straight to our take profit, which it didn't hit yet, but it did now. Okay, so no second entry. This was only one entry, and as you can see, it smashed the TP, which was a very good take profit, 8.7 R. We lost 1 R trying to enter after this bullish engulfing, but then we still watched the market and it threw us a hammer, and that's exactly when we entered. Okay, so this would have been a very nice win. And as I said, look, on the H1, this might be like a small setup, okay? But because you went down on the time frames, you went on the M5, you knew that the price will give a rejection because this was a major support zone, and more than likely the market would have gave you a rejection. That's why you decided to drop on the M5. You establish that this is your local high, this is your target, you don't want to go too crazy, and after that you went on the M5, you waited, and you got your setup, you got your win. Okay, so it is very simple. The same, you could have done the same here because the market already had two touches. You could have done the same thing here. So you could have come on the M5 and looked for a entry. As you can see, price fell into the zone, and here we have a bullish engulfing. Why? Because the body is much bigger than the bearish candle before. Okay, you can see that it fully engulfs it, even though this week is a bit higher, but that doesn't matter. That doesn't matter. We look at the bodies, not the wicks. Okay, when we look for engulfings, and this is exactly where you would have entered your buy, and your local high that time would have been probably this high right here. Okay, that would have been your local high. Okay, so you would have aimed for that high, which would have gave you a 4.5 R, and as you can see, your take profit would have been smashed in this situation as well using the exact same technique. Okay, so in the span of what, 1st of June, 2nd of June, in 2 days you would have been able to make 7 plus 4, that's pretty much 18.5, 11 point, sorry, 11.5 R in 2 days. Okay, which is really good using this technique. Of course, there will be days where you won't have any setups, but if you respect the rules, you can be pretty profitable using this way of trading. Okay, so that's how I would advise you to look for major zones of structure in the market, and after that, I would advise to go down 2 or 3 time frames depending on how much you stay on the charts and how much you want to invest, how much time you want to invest. And that's where you need to look for a buy or sell opportunity. It's the exact same thing for sells, pretty much. You have a resistance, you have more than one touches, and then you basically say to yourself, okay, this zone is pretty strong. It's more than likely show me a bounce. And then after you know that, you just go on the smaller time frames, you look for a entry, and you aim for a local high or local low. There's no need for you to aim for new higher highs because, as I said, it will already give you a big risk to reward entering on a smaller time frame. Okay, of course this trade could have been a 25 hour trade, but as I said, this doesn't interest us. Okay, we just aim for local highs and local lows. That's how I would use it. Okay, now of course you can implement it to your own strategy and try to use it however you want, but this is just my personal opinion, and you will have a much bigger win rate doing this than actually aiming for new higher highs. Because look here, let's say you would have aimed for a new higher high, your stop loss would have been hit. Here, yes, your take profit would have been hit, but here your stop loss would have more than likely get hit by this drop right here. Okay, so you would have stayed so long into a trade to eventually get stopped out. And In the meantime, you could have just aimed for the local highs and take your profits and then leave. Okay, so yeah, this is pretty much how you can identify major zones of support and resistance, and then how you can use them into your advantage to be able to get some good entries. Okay, so if you guys enjoyed the video, feel free to drop me a like and comment. Also, you can share it to your friends, family, whomever you want. That will be very much appreciated. Make sure you are subscribed to the channel to not miss out on any future uploads. And yeah, I really hope you enjoyed this video, and I hope it will help you guys in your trading journey. And I will see you all in the next one. Goodbye.